20 essential questions every homebuyer should ask their mortgage lender, along with brief explanations of why each question matters. What loan programs like conventional FHA, Virginia, USDA, Home Ready, and so on do you recommend for my situation and why? These programs vary in credit requirements, down payments, and insurance. A good lender should align the product with your financial profile. What is the nominal interest rate and the annual percentage rate, or APR, for this loan? The APR includes fees and points, revealing the true cost beyond the advertised rate. Do I qualify for down payment assistance programs or closing cost grants? Federal and state programs can significantly reduce the cash needed to purchase a home. What is the minimum accepted down payment, and how would contributing more affect my rate, insurance, and loan-to-value ratio? A lower loan-to-value often leads to better terms and fewer mandatory insurances. What will my total monthly payment be, including principal, interest, taxes, insurance, and, if applicable, PMI or HOA fees? Understanding each component helps avoid surprises in your monthly budget. How long can I lock in the rate? What does it cost? And do you offer a float-down option if rates drop before closing? A rate lock protects against increases. A float-down allows a one-time rate reduction if the market improves. Is it advisable to buy discount points? What would they cost, and what is the break-even point in years? Paying interest up front only makes sense if you plan to keep the loan beyond the break-even period. Can you itemize all origination, underwriting, and third-party fees, which are negotiable or avoidable? Comparing loan estimates among lenders helps eliminate unnecessary charges and save money. What will my debt-to-income ratio be with this loan, and does it meet guideline limits? The debt-to-income ratio directly affects loan approval and pricing. How does my credit score impact the rate and costs? What credit score tiers do you use? Moving to a higher credit tier can result in significant savings on rates and fees. Are there prepayment penalties or risks of negative amortization with this product? Avoid loans that penalize early repayment or increase the balance due to adjustable rates. When and how can I remove mortgage insurance, PMI or MIP? Canceling PMI once the loan-to-value ratio reaches 80% can significantly reduce monthly payments. What is your average processing and underwriting time? Do you guarantee closing by the contract deadline? Delays can cost you extensions or even the loss of the home. Will you service my loan or transfer it to another entity? If transferred, to whom and with what notice? Changes in servicers affect where and how you make payments and customer service policies. If rates drop before closing, do you offer an automatic adjustment or a free relock? Some lenders allow a second rate lock at a better rate within the same process. What specific documentation do you need? Income, assets, employment history, and how will you verify funds and employment? Having these requirements up front prevents last-minute denials. Can I recast the loan or refinance without cost if I make a large principal payment in the future? A recast can reduce payments without changing the rate or main terms. How does a fixed-rate mortgage compare to an adjustable-rate mortgage in my situation? You need to understand margins, adjustments, caps, and payment projections in rising rate scenarios. Are there penalties, costs, or specific requirements for jumbo loans, second homes, or investment properties? These loan types often have higher rates, larger cash reserves, and stricter debt-to-income limits. What is the estimated total cost of my loan, interest plus fees, over 5, 15, and 30 years? Seeing the lifetime cost helps you choose the most economical long-term option. Interview at least 3 lenders and request written responses, ideally reflected in the loan estimate. By comparing not just the interest rate but also fees, lock-in periods, and service quality, you can save thousands of dollars over the life of the loan.